Hey guys, welcome to our financing workshop. I'm Dino.
And I'm Ananya.
We're part of the communications team at Next Step Business, a nonprofit organization committed to bringing essential business knowledge to the next generation of leaders.
In today's video, we'll be diving into one of the most important life skills that schools don't always teach us, personal finance. Whether you're just starting out with your first job, saving for college, or planning for your future, understanding how to manage your money is key to independence, stability, and freedom.
Financing isn't just for accountants or Wall Street. It affects every decision from grabbing coffee to buying a car to saving for retirement. By the end of this video, you'll have a clear roadmap of personal finance basics, including budgeting, saving, investing, debt management, building credit, and retirement planning. Let's get started.
We'll begin with budgeting, where you'll learn how to plan your income and expenses using simple frameworks like the 50-30-20 rule. Next, we'll explore saving strategies, including building an emergency fund, using high-yielding savings accounts, and automating your savings so you never miss a step. Then we'll move on into investing for beginners, discussing why it matters, different types of investments like stocks, bonds, and mutual funds, and how to get started with low index funds.
We'll also talk about debt management, understanding good versus bad debt, strategies for paying off what you owe, and options like debt consolidation. After that, we'll cover building credit, why a good credit score matters, how to check it, and tips to improve it over time. Finally, we'll touch on retirement planning, the importance of starting early, and basic tools like 401ks and IRAs. By the end of this video, you'll have a clear roadmap to start your financial journey today.
So, what exactly is personal finance? In simple terms, it is the way you manage your money, including how you earn, spend, save, invest, and plan for the future. It matters in everyday life because of every choice we make, what phone plan we get, whether to use credit cards, or how much rent we can afford. It all comes down to money. Having strong personal finance skills gives you the confidence, reduces stress, and allows you to work towards the life you actually want, instead of living paycheck to paycheck.
The foundation of personal finance is budgeting. A budget is simply a plan for how you'll spend and save your money. It doesn't have to be complicated. You just track what's coming in and what's going out. One of the most popular approaches is the 50-30-20 rule. Here's how it works. 50% of your income goes towards needs, like rent, groceries, and transportation. 30% goes towards wants, like entertainment or eating out. And 20% goes towards savings and debt repayment. It's flexible, but provides a strong framework.
For example, let's say you make $1,000 a month. That means $500 should cover things like rent, groceries, and gas. $300 can go to wants, like streaming subscriptions, eating out, and hobbies. And $200 should go towards saving or debt management. While budgeting might seem difficult, using budgeting tools like Mint, YNAB, and even basic spreadsheets can help you track your spending automatically and give you real-time updates on where your money's going.
Now, let's talk about saving. The first priority should always be building an emergency fund. Life is unpredictable. Cars break down, medical bills happen, jobs can be lost, which is why experts recommend saving 3 to 6 months worth of expenses so you're always prepared. Once you've built that safety net, consider where you're keeping your money. High yield savings accounts are a great option since they pay higher interest than traditional accounts, meaning your money grows faster without extra effort. And if saving feels hard, automation is your best friend. Set up automatic transfers so money goes into your savings the moment you get paid. That way, you save first and spend what's left instead of the other way around.
Saving alone isn't enough to build long-term wealth, which is why investing is so important. Why invest? Because inflation slowly decreases the value of money over time, and investing allows your money to grow. There are different types of investments. Stocks, which give you ownership in a company, bonds, which are essentially loans you give to a company or government, and mutual funds, which are bundles of different investments. For beginners, one of the safest and easiest options is low-cost index funds, which spread your investment across hundreds of companies, reducing risk while still offering strong returns. Even starting small can pay off over time, thanks to compound growth.
Next up is debt. Not all debt is bad, but it's important to know the difference. Good debt includes things like student loans or mortgages, which can help you build your future. Bad debt comes from high interest credit cards or payday loans, which trap you in cycles of repayment. To pay off debt efficiently, many people use the avalanche method, tackling debts with the highest interest first, or the snowball method, starting with the smallest balance for quick wins. If debt feels overwhelming, debt consolidation is another option, combining multiple payments into one with lower interest rate. The primary goal is to free up money for saving and investing while reducing financial stress.
Your credit score is another crucial piece of the puzzle. It's a number that lenders use to measure how trustworthy you are with borrowing money. Scores usually range from 300 to 850. The higher your score, the better your chances of getting approved for loans, credit cards, or even renting an apartment. To keep track, you can check your credit card report once a year for free through websites like annualcreditreport.com. To improve your score, pay bills on time, keep credit card balances low, avoid opening too many accounts at once, and use credit responsibly. Think of credit like trust. It takes time to build, but it can be ruined quickly, so protecting it is essential.
Finally, let's talk about retirement, even if it feels like a lifetime away. The earlier you start, the easier it becomes, thanks to the power of compound interest. That's when the money you invest earns interest, and that interest also earns interest, snowballing over time. Two of the most common retirement tools are the 401k and the IRA. A 401k is a retirement plan offered by many employers. You put in part of your paycheck before taxes, and after your employer will match some of what you contribute, basically free money for your future. And an IRA, an individual retirement account, is one you open on your own.
With a traditional IRA, you may get a tax break now, but pay taxes later. With the Roth IRA, you pay taxes now, but withdrawals in retirement are tax-free. Both offer tax advantages and can grow your savings significantly over decades. Starting even in your early 20s can mean the difference between struggling later in life or retiring comfortably.
So let's recap. Personal finance is about taking control of your money so it works for you, not against you. Start with a budget, build savings, invest wisely, manage debt, protect your credit, and think about retirement early. Each of these steps may feel small on its own, but together they create financial freedom and peace of mind. The best part, you don't have to wait. No matter your age or income, you can start today. So take that first step. Download a budgeting app, open a savings account, or check your credit score. Your future self will thank you.
To explore more topics of the business world, we highly encourage you to take a look at the resources linked in the description box. Make sure to check out our other programs under Next Step Business, such as Boost, which is our recorded workshop program where we present a wide span of business topics, like this video. Workshops will be posted on YouTube monthly.
Thank you for watching, and we hope to see you next time.